Starting a business can be such an exciting thing. But remember, when you start that business, don't forget there are things you have to report, including your taxes, to the IRS. Now, man, that is a rough way to start a conversation. But at the end of the day, remember, the IRS is one of the single entities that can separate you and the wealth from the wealth you're trying to create. So whenever you're starting a business, right, the last thing you're probably thinking about is your tax destination. But there's so many things you have to consider because at the end of the day, when starting a business, there's so much opportunity for you in the tax code. So for example, if you're starting a business and you're just creating a product and putting some hours on the side, maybe it's a side hustle, a side gig, you're likely going to fill out a Schedule C as a tax return. That's a sole proprietor. What that simply means is whatever money you have received from creating this good or service, you're going to be issued a 1099 or income for that to report to the government. Now remember a couple things about this sole proprietor tax return. So when you're employed and you have a W-2 wage, you are going to have to split the Social Security, Medicare, and other taxes with your employer. But when you're Schedule C, you have to actually take on both of those. So both sides of that coin. Now you may say, Grant, my goodness, is that really that big of a deal? Well, it's almost north of 15%, so it can be a big deal. But the other thing about a sole proprietor we often see families forget about is there are things they can deduct from creating income. So for example, if you're having to drive to certain destinations, you can deduct that mileage. It lowers that income you have to report on that sole proprietor tax return. If there's goods you have to buy, there are things that you're using like time, office space in your house, etc. Those things are deductible. And then we have families and friends that actually then begin to excel in their business. They take the next step forward into creating a pass-through entity. So something like an LLC or an S Corp. And so when you get to that stage, you're actually now allowing yourself to pay payroll tax in a different form. And so here we recommend really specifically hiring a very good tax professional to help you navigate that situation, because at the end of the day, when that success begins to rise, guess what? Uncle Sam begins to ask for more. But there are great levers that you can pull in both of those tax entities to ensure that you are keeping more in your pocket and paying Uncle Sam his due. So a lot of great content that we can dive deeper into, and we will here soon. But hopefully this is helpful as you navigate your financial journey, especially as you build your business. And we'll see you in the next one.
If you're interested in more content, please click the link above. If you're interested where you stand personally, please click the link below and you can create a profile, and a member of our team will reach out to talk about where you stand within the 5 critical elements on your financial journey.